Welcome back to Finance 101, where we help you master the fundamentals of finance. If you're trying to build your credit score or just figure out why your score dropped 50 points out of nowhere, then this video is for you. Today, we're breaking down 10 things that actually impact your credit score. Some seem obvious and some might surprise you, so let's get into it. The FICO credit score is the most commonly used credit scoring model. It's used by 90% of leading lenders. Although alternative models like the Vantage score do exist, FICO remains the benchmark across the lending industry. The 10 things that we're going to discuss today will revolve around this particular scoring model. Number 1, payment history. And this is a big one. It makes up 35% of your overall score. Because your credit score is essentially a measure of trust, lenders want to know one thing. If they lend you money, will you pay it back on time? Late payments, missed payments, and defaults can drag your score down fast, so even if it's just the minimum, always pay on time. Number 2 is credit utilization. This is the percentage of your available credit that you're using. Think of it like this. If you have a credit limit of $10,000 and you've used $7,000 of that limit, that means your utilization is 70%. This makes up 30% of your overall credit score, making it the second most important factor. Try to keep it under 30%, ideally under 10%. So if you've got a $1,000 credit limit, don't carry a balance of more than $300, but ideally $100 would be good. Number 3, how long you've had your credit. Lenders like to see that you've been managing credit responsibly over time, and this makes up 15% of your overall credit score. If you've had accounts open for many years and maintained them responsibly, it shows stability. That also would suggest that you have experience managing debt, making on-time payments, and using credit wisely, not just for a few months, but for the long haul. Number 4 is credit mix. Having a mix of credit, like credit cards, auto loans, and student loans. This can actually help your overall score. It shows lenders you can handle a mix of revolving and installment credit, and this makes up 10% of your overall credit score. Number 5 is new credit and hard inquiries. When you apply for new credit, whether it's a credit card, a car loan, or mortgage, the lender pulls your credit report to assess the risk. That's what's called a hard inquiry, and each one sends a little ripple through your credit score. New credit also makes up 10% of your overall score. Lenders prefer to see a stable, consistent credit history rather than a sudden spike in activity. Applying for a bunch of new accounts could suggest that you might be taking on more risk than you can actually handle. Number 6 is the total amount of debt. Even if you're paying on time, carrying too much total debt can hurt your score. Lenders want to know that you're not overextended. Number 7, closing accounts. Believe it or not, closing an account, especially one with a high limit or long history, can actually cause a dip in your score. It shortens your credit history and may impact your credit mix, as well as raising your utilization. Number 8, credit report errors. Mistakes happen, a wrong balance, a late payment that wasn't yours. It can really mess things up. You want to check your report at least once a quarter, and you can get a free report at NerdWallet.com or other online sites like annualcreditreport.com. Number 9, being added as an authorized user. This can help your score if the primary user has good habits, but if they miss a payment or max the card out, it could also hurt your score. And finally, number 10, collections and charge-offs. These are major red flags on your credit report. Even one account can do serious damage to your credit score if it goes to collections. This can be one of the most detrimental things to happen to your credit score, so again, make sure to check your credit report frequently. So there you have it, 10 things that can impact your credit score. Remember, credit scores are not about perfection, they're about progress. If you've made some mistakes in the past, it's not too late to recover. Just start with one habit, like checking your credit report regularly and sticking with that. Celebrate small wins because small wins do add up, and you've got this. Stay tuned for more 101 breakdowns, and if there's any topic that you want us to cover, drop that in the comments below, and thanks for watching.